There's been a historic 24-year-long paper wealth expansion. Household financial assets were seen expanding globally with U.S. balance sheet leadership. So too was the creation of new, mostly government debt. Our chief equity strategist and economist, John Blank, says there's good news in this debt accumulation story, and he's here now to explain it. John, what exactly is the good news in debt accumulation, and who's it good for, consumers or the economy?
Well, for consumers, Terry, we have a new high in household net worth of 147 trillion in the United States. You got to keep in mind that 27 trillion is the size of the U.S. economy, so that's multiples of the production capacity of the U.S. economy. Total household financial assets, I've got them at 113.6 trillion, also a record. And house owners' equity in real estate is now at 32 trillion, again above the entire weight of the U.S. economy. So financial assets in households, whether it's equities or equity in real estate, is astonishingly high, Terry.
So, what drove the debt accumulation part of this conversation, though? And what years are we talking about for this accumulation?
Yeah, I mean, basically, according to McKinsey, the consulting firm, it started in 99, 2000, so it's 24, 25 years. And from 2000 to 2021, $1 in net investment in these areas of households came with $1.90 in net new debt for the government. And during COVID, from 21 to 24, $3.40 in net new debt gave us $1 in net investment. So basically, we've been punishing our government collectively, issuing much more debt than the net investment that comes to the private sector.
And what about currently? How does all of this compare with current consumer and government debt loads?
Well, it's made the household liabilities really low. They haven't been this low since even in the 90s. So it's left our households incredibly strong and in great shape. And you got to keep that in mind. That's what's keeping the economy aloft and surprising a lot of people. What concerns people is when the government has to pay higher interest rates on this debt they own. And, that is always a worry, but people have been wringing their hands about that for decades, but it does need to be understood that we are in multiples higher in the level of debt on our U.S. government than before. Having said that, Terry, so these deficits are also being managed at the same level or very near it in India and China. So the idea that the United States is out of step with the newest, strongest economies in the world is actually not true either. They're doing the same thing.
So, bottom line, does this have any chance of ending badly, especially for consumers?
I don't think it can end badly for consumers. And I think, people got to remind themselves that for the government, they have a lot of choices that consumers don't have. But one of them will be a discussion of lowering the deficit spending annually so that the pressure doesn't get to a breaking point. So what this does for any government, particularly after the election, will be to get this debate to close the deficit so that pressure on what we have accumulated doesn't grow even more. So it gets to be a tax rising situation or a spending cutting situation or some mix of that. And that is just a post-election scenario. In general, Terry, people kick the can on these things and kick the can and kick the can. So very unlikely to have a fuse lit on this. It's just going to go on for a while.
You've written that our federal government and those abroad now shoulder the bulk of the debt burden. How so?
Yeah, like I've told you, double of what the households have gained has been put on the balance sheets of the federal government. And that is basically the point. The debt of the U.S. federal government has grown dramatically.
What part does all of the foreign aid that we've been sending abroad play in this debt burden?
Foreign aid is not an issue at all. What has happened is imitation by other governments of the U.S. story. Europe has done it. Even China and India have done it. So basically, it's very unfortunate that we set such a poor example on this matter, but that's what's happened.
So then, correct me if I'm wrong, that does not alter what we've discussed here and doesn't place an unnecessary further burden on our U.S. economy going forward?
Not in terms of interest payments yet, Terry. It's a watch and see kind of thing.
Where does the wealth expansion come in, and for whom?
Well, the private sector, particularly people who own stocks and houses, are doing extremely well with their wealth and hopefully will hand off to their children and grandchildren some of that wealth through inheritance. And that supports spending. Typically, wealth to consumption is a 20-to-1 ratio. So it's not a lot of consumption. It's not the level of consumption that those trillions that I threw out there show you. It's a 20th of that.
All right, more strong buy stocks you've been watching include the Progressive, BlackRock, and Safran.
Yeah, the ticker PGR, the Progressive, is now a $212 stock this morning, number one ranked strong buy. What's going on here? This is a major auto insurer in the United States. And if you haven't checked, auto insurance premiums have gone up through the roof. And by and large, that has benefited the Progressive, and that stock has been on a tear as a result of it. So keep in mind that when we hear about higher inflation partly because of higher auto insurance, that has reflected back on PGR.
And BlackRock.
Yeah, $762 a share. I mean, just an astonishingly large number for a publicly traded investment management firm. They do $41 a share in earnings this year, $47 a share next year. So again, when we're talking about investment management that's benefiting from those strong household net worth ratios and balance sheet, you got to look right on back to ticker BLK. So if you want to trade that benefits from all that improvement in the household balance sheets out there, look to ticker BLK. Safran, S-A-F-R-I, you probably do not know. It's a French company, and it's a high-tech company that produces aircraft, rocket engines, and propulsion systems. So this is obviously aerospace, aircraft, and defense all have been hot in this scenario. Obviously, travel and airlines are doing quite well, and defense spending, because of the Ukraine and other parts of the world, are doing quite well. So this French maker of all that stuff has done really well, and we're looking at a stock trading around $56 a share with a P/E ratio that's 30 times earnings. So basically a growth stock for a French company that's a defense climber, not often seen. So again, people like the shares because of the stories of the fundamentals underlying it, Terry.
Our chief equity strategist and economist, John Blank, on wealth expansion and the debt burden. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.